Now this is a case on job costing, and you have to read the material very carefully. Triple C Limited is in the business of manufacturing cabinets, computer stands, and countertops. Most of its jobs are contracts for new home builders. Following information is available. So we have 4 jobs here. Job 101, 103, 111, 115. Costs incurred up until July 1st. Materials and overhead, 9,000, 25, 6, and so on. There was nothing. Job 115 obviously was only started in July. This one continued on into July, and there was 1,000 in labor that was added to it. This one, they're being sneaky. They're saying, okay, you have to calculate the materials, you have to calculate the labor, it's not completed. 111 is completed. So 101 is completed and 111 is completed. The other 2 are still in work in process. Now they tell you the opening balance July 1st for materials was 3,000. They purchased 6, so there's 9,000 available, and they used 4,900. Well, how much would the direct materials be for job 103? Well, if you took the 9,000 that was available and you subtract what was here and here and here, then you would get material to be 3,600. That is this plus this minus this minus this minus this. All right. Now for the labor, they said that there was 8,000 that was issued in July. So 8,000 minus 1,000 minus 3,000 minus 2,000. Therefore, the amount of labor in here would be 3,800. Okay. Now they want the ending balance in material. So you can figure that out because you have this plus that minus that, the amount issued, and that would be 4,100. All right. On July 1st, finished good inventory consisted of just job 105, which had a total cost of 18,000. So there's only one job in finished goods. This was sold during July. Manufacturing overhead, and this is very important, is 120% of direct labor costs. You notice up here there are 3 cost elements: direct material, direct labor, and overhead. They did not give you the overhead. So you're going to have to calculate. The overhead is going to be 120% of this, 120% of that, and the same over here, 120% of whatever was spent on labor on each job. So they ask you to begin. Calculate the cost to complete 101 and 111, and also the inventory account balances for direct material, work in process, finished goods. You don't need to use T accounts, but you should show clearly how these costs are assigned. All right, now you start with work in process, and you simply add everything. You take job 101, they told you the material, they told you the labor. You take 120% of the 2,000, so it's 2,400. Then you labor, and then you take 120% of that, which is 1,200, and the total amount transferred out was 15,600. That would be transferred to finished goods. The same thing for the work in process. Material, labor, 120% of labor, 500 for material, 3,000 for labor, and 120% for labor. So the amount for work in process for job 111 transferred to finished goods is 7,920. The other 2 jobs, you do the same thing. Material, labor, 120% of labor. Material, labor, and 120%. And it's not finished, but to date it has 17,760. And job 115, to date, material, labor, and overhead. Always the 3 cost elements. Now we already did part 2. We looked at, okay, what's the balance in the direct materials? Well, what was debited to direct materials, 3,000 and 6,000. And what was credited was 49, so therefore the balance is 4,100. Finished goods, it had 18,000 in there. Then in went job, whatever that first job completed was, 103. And then this one was 1111. And of course they said they sold this one, so therefore the balance in finished goods is that. And lastly, they want us to summarize it. So there's your job. Job 101, 15.6. Job 111, 7.920. Both of these are in finished goods. Direct material inventory. 4,100. Work in process, just those two last jobs. And finished goods inventory. And there are your inventories. Okay, finished goods, direct material, WIP. Now, these two, of course, add up to that. Now, job costing problem, the thing is to make sure three cost elements, they will never give you the overhead, but they have to tell you how it's applied. And so you apply it and you just work the numbers. Now, this is all basically quantitative. So the issue that you are going to analyze is, first of all, what is the cost of these jobs that were completed? What's the cost of finished goods inventory? What's the cost of direct material inventory?